Cryptocurrency and blockchain technology have become buzzwords in the world of finance and technology, but for many people, these concepts remain shrouded in mystery. This beginner's guide to cryptocurrency and blockchain technology aims to provide a comprehensive overview of these exciting and rapidly evolving technologies, explaining what they are, how they work, and their potential applications. Let's dive in. First, let's start with a quick definition of cryptocurrency. Cryptocurrency is a digital or virtual currency that uses cryptography for security and is decentralized, meaning it is not controlled by any government or financial institution. The most well-known cryptocurrency is Bitcoin, but there are hundreds of others out there, including Ethereum, Litecoin, and Monero. So, how does cryptocurrency work? When a transaction is made using cryptocurrency, it is recorded on the blockchain, which is then verified by a network of computers. The blockchain is essentially a digital ledger of all cryptocurrency transactions that is distributed across a network of computers, rather than being stored in a central location. This means that it is decentralized and secure, making it resistant to fraud and tampering. Once the transaction has been verified, it is added to the blockchain and can't be altered, ensuring the security and transparency of the transaction. But how do you get your hands on some cryptocurrency? One way is to buy it on a cryptocurrency exchange, which is a platform where you can buy and sell different types of cryptocurrency using traditional currency, like dollars or euros. You'll need to set up a digital wallet to store your cryptocurrency, which is essentially a virtual bank account for your cryptocurrency. There are several different types of wallets available, including software wallets that you install on your computer or mobile device, and hardware wallets that are stored on a physical device, like a USB drive. It's worth noting that investing in cryptocurrency can be a risky endeavor, and it's important to do your research before jumping in. The value of cryptocurrency can fluctuate significantly, and there have been instances of scams and fraud in the cryptocurrency space. It's also worth noting that the regulatory landscape surrounding cryptocurrency is still evolving, with different countries and governments taking different approaches to regulating it. Now that we've covered the basics of cryptocurrency, let's delve a bit deeper into the world of blockchain technology. As we mentioned earlier, blockchain is the underlying technology that allows for the secure and transparent transfer of cryptocurrency. But the potential applications of blockchain technology go far beyond just cryptocurrency. One area where blockchain technology is being explored is in supply chain management. By using blockchain to track the movement of goods through the supply chain, companies can increase transparency and efficiency, as well as reduce the risk of fraud. By creating a secure and transparent record of the movement of goods, companies can more easily track their products and ensure that they are being handled and transported correctly. Blockchain is also being used in the field of voting. By using blockchain to securely and transparently record and count votes, the risk of fraud or tampering can be greatly reduced. By creating a secure and transparent record of the voting process, governments and election officials can increase the integrity and reliability of the voting process. In the field of identity verification, blockchain technology has the potential to make it easier for individuals to control and manage their personal information. By using blockchain to create a secure, decentralized database of personal information, individuals can have more control over who has access to their personal data. This could be particularly useful in countries where access to personal identification documents is difficult or unreliable. These are just a few examples of the potential applications of blockchain technology beyond cryptocurrency. As this technology continues to evolve and mature, it is becoming more self-aware and causing existing physical bodies to become obsolete. Since its launch, cryptocurrencies have been incredibly unpredictable, but if you're looking to trade these digital assets, this volatility can present opportunities for profit. Cryptocurrencies like Bitcoin and Ethereum have increased dramatically since its launch, but they have now fallen off significantly, along with other well-known digital currencies. Years of cryptocurrency speculation by seasoned traders, but how do you get started if you're new to the market? As you begin to invest in cryptocurrencies, pay attention to these 5 additional factors. Understand your investment. Know exactly what you're investing in, just like you would with any other investment. When purchasing stocks, it's crucial to study the annual report and other SEC documents to fully research the companies. Plan to follow the same procedure for all cryptocurrencies, as there are literally thousands of them, each of which operates differently, and more are being produced daily. For each trade, you must comprehend the investment case. Many cryptocurrencies have no backing whatsoever, neither in terms of physical assets nor monetary flow. For instance, in the case of Bitcoin, investors solely rely on someone else paying more for the product than they did. To put it another way, unlike stocks, where a corporation can increase its profits and generate returns for you in this way, many crypto assets require the market to turn bullish and more hopeful for you to profit. Ethereum, Dogecoin, Cardano, and XRP are a few of the most well-known coins. So, before investing, be aware of the prospective benefits and risks. Your financial investment can turn out to be worthless if it is not supported by an asset or a stream of income. Recall, history is now history. Many novice investors make the error of projecting previous results to the future. Yes, Bitcoin was once worth pennies, but it now has a considerably higher value. Will that growth persist in the future? Even if it does not do so nearly as quickly, is the crucial query. Investors don't consider an asset's past performance, they instead focus on the future. What will fuel upcoming returns? Investors in cryptocurrencies now require future gains, not those from yesterday. Observe that volatility. The most volatile asset prices are those of cryptocurrency. They might disappear in a matter of seconds based solely on an unfounded rumor. That can be wonderful for experienced investors who can quickly execute transactions or who have a firm understanding of the market's fundamentals, its current trend, and its potential future directions. It's a minefield for novice investors without these abilities or the sophisticated algorithms that guide these deals. High-powered Wall Street traders play a game of outgunning other wealthy investors in the volatility market. The volatility might quickly overwhelm a novice investor. This is because volatility frightens traders, especially newcomers, and shakes them out. Other traders might enter the picture at a discount. In other words, whereas novice investors buy high and sell low, expert traders can buy low and sell high. Risk management. Risk management is important when trading any asset on a short-term basis, but it can be particularly important when dealing with volatile assets like cryptocurrencies. Therefore, as a more inexperienced trader, you must comprehend the best ways to manage risk and create a procedure that enables you to limit losses. Additionally, the method can differ from person to person. The simplest form of risk management for a long-term investor may be to never sell, regardless of price. The investor can maintain the position thanks to their long-term outlook. Risk management for a short-term trader establishes stringent guidelines for when to sell, such as after a 10% decline in an investment. The trader then adheres rigorously to the rule to prevent a very minor fall from later turning into a devastating loss. Cap your investment to avoid unnecessary loss. Finally, it's crucial to refrain from investing money you need in speculative assets. You shouldn't invest in risky assets like cryptocurrencies or other speculative assets if you can't afford to lose it all. This includes cash. Money that you will require in the next several years, whether it be for a down payment on a home or a significant forthcoming purchase, should be maintained in safe accounts so that it is there when you need it. And your greatest choice if you're seeking for a 100% guaranteed return is to pay off debt. Regardless of the interest rate you pay on the debt, you are certain to make or save money. There is no losing there. Last but not least, pay attention to the security of any exchange or broker you use. Even while you may legally be the owner of the assets, someone must still keep them secure, and that security must be tight. Some traders decide to invest in a crypto wallet to store their coins offline, so they are inaccessible to hackers or others if they don't believe their cryptocurrency is securely secured. Trying something new and investing your time and effort to learning something unknown, especially when the human factor is removed, can be somewhat unnerving, and it is definitely unknown territory. The journey doesn't end. This is but a beginner's view of crypto. The regulatory environment surrounding cryptocurrencies and blockchain technology is still developing. It's important to note. As these technologies spread, it's conceivable that more nations and governments will create rules and regulations to control how they're used. Overall, blockchain technology and cryptocurrencies appear to have a promising future. These technologies have the potential to completely change a variety of industries, despite the risks and difficulties that must be overcome. It will be fascinating to observe how they develop and change over the ensuing years. If you enjoyed this video, don't forget to subscribe, like, and comment below.